Hello, everyone. Sarah Barker with Connect Our Elders, and today is another episode of the Empowering Aging podcast. I'm very grateful to have with me today Angela Wyckoff, who is going to be talking about reverse loan solutions powered by Amerifund Home Loans. Thank you so much for being with me today, Angela.
Thank you so much for having me. I really appreciate it.
Absolutely. So before we get going with your presentation, so you can provide some education to our audience, I do want to ensure that we thank our sponsor for the Empowering Aging podcast, Retirement Genius, all things alternative funding solutions for private pay care. So very grateful to Retirement Solutions, Retirement Genius, and my good friend Chris Orestes for making these possible. So Angela, a couple of questions. Do you want me to ask you the questions after your presentation, or would you like to jump into the questions now?
Well, let's maybe ask me, throughout the presentation as you run into things that
Okay,
need more clarity. But you can definitely ask me anything anytime.
wonderful. So before I go ahead and show your slide deck and you move into the presentation, would you mind sharing with the audience a bit about who you are, your background, and why this is your specific focus?
Absolutely. So I've been in the lending industry for over 20 years. I started when I was 3. Um, and seniors have just been a passion of mine. I, experienced things very young. I was 13 when my great grandmother was in our home, and she was, of course, preparing for end of life. And I saw her moved into a nursing home.
Mhm.
And I just felt like if she had stayed home and if we had brought care to her, she would have, been with us longer. And,
Mhm.
so at 13, I was impacted by this. And then, of course, when I got the opportunity to learn more about how a reverse mortgage could be useful, um, I jumped at it because, I just know from past experience and, of course, just people along my life
Mhm.
running
Mhm.
into this. So, it's studies have shown people will live longer in their own homes. And
Mhm.
so it's my mission in life to, just bring that information to people because, reverse mortgage still has such a negative stigma.
Mhm.
And, the problem is that people call an 800 number, they get an unlicensed representative, and their only focus is company profits, not what's best for the senior. So,
Right. Not actually advising them. And I tell everybody that, it's not the right solution for everybody, but it is
mhm,
absolutely a resource that should be looked into and considered, right? Because
right.
oftentimes it is the perfect solution for a
Mhm.
situation.
And I've taken the education, the licensing, everything that's necessary to structure these loans properly with integrity. That's my huge, huge, huge thing. If I can tell you anything about me, is that I do the right thing.
I love that. Can you say that again? If you can remember it, what you just said, you take it and craft it with integrity.
Yes, I take loans and I structure them with integrity so that they can last for the lifetime of the senior. That's so important to me.
That's wonderful. Okay, so I'm going to go ahead and add your slide deck and feel free to take it away.
Awesome. So do I hit enter or do I mouse forward?
You can
Oh, click. Here we go.
mouse forward.
Slides.
Yes. Mhm.
Got it. Got it. Got it. Okay. So aging in place. What is it? And how do we make the most of it using your home to stay at home? So, financial planning is the bedrock of aging in place. Money cannot buy happiness, but it can buy autonomy, flexibility, and the freedom to live life the way you want to live. Make no mistake, post retirement expenses can be substantial, higher than many people realize. The US General Accounting Office estimates that someone turning 65 today can expect to spend upwards of 200,000 in future medical costs, deductibles, copays, Medigap premiums, and out of pocket expenses. So, this was from the book How to Age in Place by Mary Languland. I think Rand, sorry, I always mess that up. And so aging in place is a rapidly growing lifestyle option for Americans approaching or beyond retirement age, 55 plus. And I asterisk that because most reverse mortgages start at age 62. However, there are programs that start as young as age 55. And of course, the younger you are, the more planning we can do. And but of course, the older you are, the more access to your equity that you could have. So it does facilitate remaining in the home of your choice for as long as you would like to and are able to.
Mhm.
So today we're going to consider 5 of the most important aspects to plan for. So housing, health and wellness, personal finance, transportation, and community and social interaction. Are you comfortable and safe in your home? Is this the home you want to be in for the foreseeable future? And what would life be like in 10 or 15 years in this home? Should you move now? Are there modifications to make your home a great place to stay? So, are you near groceries, healthcare, friends, family, social, or religious groups? Are you able to maintain the property? I mean, if you're on a 5-acre property, that could be difficult later in life. Are there steep stairs? If you had mobility concerns, would you need a walker, a wheelchair, ramps, sit down tower, shower, tub? And could these things be easily accommodated in your home?
Mhm.
Do you currently have a mortgage? Are you still paying for your home? And does that leave enough money for your needs each month? So, if your monthly home costs are too expensive, some options you can explore are downsize to less expensive housing, pay off your mortgage, home sharing, refinancing at a lower interest rate, and getting a reverse mortgage.
Mhm.
So, how is your health now? How do you plan to maintain your health as you age? Are you active? Do you belong to a community group and stay active and social? Do you already have help or a plan to get help in your home should you need it? Do you know where to find caregivers if needed? And if your plan is to get help from family, have you talked to them about it? That's important. I know, for instance, I'm going to go off track here for a second. My mother in law fell over her dog. She laid on the floor for 4 hours before paramedics were able to essentially break in her door and pick her up off the floor. And she has bad knees, and my husband and I are just not financially nor physically capable of caring for her. So I
Mhm.
did a reverse mortgage for her. I gave her access to a growing line of credit so that when, not if, when she needs care, it's available for her.
Mhm. Thank you for sharing that example.
Of course, of course. I mean, she means the world to me. And it's so some people ask me, "Well, you put your mother-in-law in it. That could be a good or a bad thing," but she's been a better mother to me than my own. So,
I'm sorry to hear that.
a positive and a negative. So most of us, in reality, most of us are facing 15 to 30 years of retirement. Americans are living so much longer now. And do you have a monthly budget for retirement? Does it meet your needs, allow you the funds that you need to enjoy your life too? And do you feel you have enough money to get through retirement now? A lot of people are so worried about outliving their money,
Mhm.
and this could be a great tool to help negate that.
Mhm.
So, what if you or your partner needs help or care in your home? One of you passes. Are you planning on living to 99? How about 105? I mean, we just don't know, right? It's not in our hands.
Mhm.
So, planning in advance is so critical, having that conversation.
That's what I'm always talking about is please be proactive in
Mhm.
understanding what the resources are.
Exactly. And my mother-in-law, it took her 4 years to actually do it because she didn't retire until she was 72 because she was a nurse. She's a rehab nurse, and that's what drove her, and she didn't want to retire, but
Mhm.
her knees were giving out and she had to retire, and When we looked at her finances, she didn't have a lot in her savings. She never signed up for a 401k after being a nurse for 40 years. Sorry, Bev. I love you.
Well, that's okay. So a financial advisor I have known for many years said that our healthcare practitioners, right, tend to, and he told me this many years, that they tend to be the worst about financially planning.
So, another thing to consider, do you currently drive? And if yes, do you feel safe and comfortable? I can't tell you how many people I'm like, oh, they shouldn't be driving anymore. And what if you didn't want to drive or couldn't anymore? Is there public transportation near you? Do you know how to use the bus, trolley, train systems? What about Uber or Lyft? And are you comfortable with that? Because, I mean, you got to be comfortable. Ask a friend. Try riding the bus or trolley before you ever need to do it. That way
That's
you
a
can stay
fantastic idea.
independent. Yeah, staying independent is so important in this time, and you don't want to feel like a burden on someone, but you want to be able to, use the resources available to you.
Mm-hmm.
So, do you feel lonely? Do you feel like you're a part of your local community? And if not, why and what steps can you take to join in? Do you have access to entertainment like books, movies, games? Do you have a pet? Does your community have a senior center you can join? Are there senior fitness classes, yoga, a pool nearby? Can you volunteer in your community? And would you consider moving to a senior community being a better fit for you?
Mm-hmm. Mm-hmm.
Have you ever heard of being house rich and cash poor? So I talk on a radio show on Saturdays, and that is one of the main things, is that people sit on the equity of their home when they could be using it to enjoy their later years. 83% of the average senior's net worth is in their home. And you can look that up on HomeBot, but it's true, and I see it all the time. I actually had a client who continued to pay their mortgage, and their wife got cancer, and
Mm.
they went from getting 2 social security checks to 1,
Mm. Mm-hmm.
and then still having to pay the mortgage, which was equal to his check.
Do you
So
find that many seniors, when they could be using the equity in the home to create the life they want or to pay for care, are they continuing to sit on it because they feel as though they need to give it to their children, but they haven't actually had the conversation where maybe the children would say, no, mom and or dad, we would like for you to use this to be able to provide for yourself. We're okay. We don't need the home.
True, very true. I hear that a lot with the booming generation.
Mm-hmm.
And they were brought up to pay off your house and
Mm-hmm.
leave it to your children. And now a lot of times I run into people that are like, you know what, my children are very successful and they don't expect anything from me. So I do want to enjoy the rest of my life in this home. Or they could take the proceeds from this home and purchase a more suited property. If you have a 2-story house and your knees are giving out, maybe we need to look at a 1-story property in a different neighborhood, or in the same neighborhood with your same shopping and all that. But
Mm-hmm.
the possibilities are endless.
Mm-hmm.
So there's common misconceptions. I can't tell you how many times a day I hear this. The bank owns your home. They do not own your home. You remain on title just like any other mortgage. You can't sell. You're stuck. You can sell anytime you want to. You can refinance. You can sell. You could move to another property. You could end up in, assisted living. Anything you need to do with your property is yours to do. You have to take all the money at once. No. Here's the thing. That's why when people call those 800 numbers, they're like, here's 200,000. And it's like, okay, what is your plan with that 200,000? So I had a client whose son called me and said, "Hey, my dad's looking into a reverse mortgage, but they want to give him like 200,000, and I just don't know if that's the best way. Can you take a look at this plan for me?"
Mm-hmm.
And so I talked to dad and I said, "Hey, what's your plan for this money?" And he said, "I want to take 30,000 and I want to repair the roof and do some things around the home, and then I'm going to put the rest in my savings account and take $1,000 a month to pay for my wife's long-term care policy because she had Parkinson's."
Mm-hmm.
So I had to explain to them, why would you pay interest on $200,000 from day one?
Mm.
To have it sit in your savings account that's going to get what, a 0.5%?
Mm-hmm.
So I showed them that I could get them $1,500 a month to them to pay for that policy and maybe a little more, right?
Uh-huh.
And by age 100, because the reverse mortgage stops at age 150, by age 100, they'll have received 478,000 by taking that monthly distribution versus getting the 200,000 in a lump sum.
So double the original amount they were being told.
Yeah,
Okay.
and they got the 30,000 at closing.
Wow. Do you
So,
find that you're partnering a lot with financial planners
yes.
constructing these plans?
Correct. And see, that's one thing is some financial planners still have the stigma of, oh, I'm not supposed to say reverse. It's a failure on my part. And some are like, absolutely. They see the value in it. They know that they can, set up a line of credit and use that as a resource in down markets. So why continue to deplete your portfolio when you could use the reverse in lieu of that?
Got it.
So also, there you go. Next question or next misconception. You should use all your other assets first. Why would you do that? So financial planners recommend reverse mortgages so you don't use all your other assets so quickly. I have another presentation where, it shows you what it looks like if you just deplete all of your stuff and then get a reverse mortgage, or if you do it in conjunction. And the bottom line is just astronomical.
Mm-hmm.
Astronomical, the difference in how much more the money will last.
We'll have to get you on to do that presentation too.
Of course, I would love to. So you aren't in control. You are absolutely in control. You can make payments if you want to. A lot of people treat this like an interest only loan so that the balance doesn't grow as quickly. So you can take that interest, divide it by 12, and decide to make payments if you'd like. If you make one payment, this month, and you don't make one for 7 months, and then you make one another 18 months from now, nobody's ever going to call you and say, "Hey, you made a payment once. What happened? Why aren't you continuing to make payments? What's going on?" And you are in control of that. And also the line of credit option, if you do use a lump sum of that, you can also put that money back in and it can start growing as well. So that's a really, really important function, because I know a lot of financial planners go, "Oh, well, I just recommend somebody get a HELOC." Well, a HELOC is a home equity line of credit, and it's only you can only draw from it from the first 10 years.
Mm.
And you have to make interest only payments. After that 10-year period, there's 20-year amortized payments. Do you think that in 10 years you're going to bring home more money than you do now? I mean, not not necessarily.
Well,
So
hopefully at my age, but right.
at your age, yes, but
Yeah.
but it just it doesn't make sense to do a HELOC when you can definitely leverage a lot more using a HECM.
Okay.
So,
Before we go into this slide, Angela, in case anybody is interested in what you're saying, how can they contact you?
so my contact information is on the back, but they can call me at 805-301-1933, or you can shoot me an email, angela@reverseloansolutions.com. I'm
Thank you.
happy to take the time to talk to anybody. It doesn't cost anything to talk to me. And we have a conversation. We talk about pain points. We talk about what concerns you and what is the most important to you. And then I provide you options. And if
Mhm.
none of those options are a fit for you, that's okay.
Mhm.
Or you say, "Hey, can we look at it if we do this instead?" There are no two reverse mortgages that are alike. It is the most customizable, most unique product out there.
That's great. That's great to know.
So in this case, paying off a current mortgage. So Jim is 82 and Cindy is 57. Now, you notice Cindy's a lot younger, and most of these loans are based off the youngest borrower.
Okay.
So take that into consideration. Their home is worth 800,000. They owe about 180 on their current mortgage, and they want to stop making the mortgage payments and get some cash for their business without having another payment or increasing their current payment.
Okay.
So what they would do is the reverse mortgage divides up the equity in the property. So they take the value, they pay off the mortgage, they have an amount of equity reserves, and that's strictly based off your age of the youngest borrower. There's financed closing costs. And in this particular case, this one is a fixed option. And those tend to cost less because there's no mortgage insurance. But mortgage insurance is important and can play a very significant role. So I can talk to you about that in a minute. And then cash at closing. Now, in this particular case, they get a distribution of 213,000 at closing. And I call these a one and done. So you get the cash and that's it. You don't have any other access to your property unless you refinance. So
Okay.
if there's an opportunity, down the road that where your equity has increased or the rates have decreased, we can always take a look if there's a way to leverage additional equity later down the road.
Okay.
So the one thing I wanted to bring into play is a lot of people say reverse mortgages are so expensive, and what they're not being explained is that some of these are FHA insured. So there is an upfront mortgage insurance premium, and that's 2% of the value of the home. Now, that 2%, let's say in the case of a $500,000 loan, so you're looking at, sorry, I'm very poor at math.
I'm horrible too. I always have to use a calculator.
So you're looking at $10,000. So $10,000 upfront
Mhm.
financed into the loan, and then of course title, escrow, things that would be on a typical refinance situation. But that $10,000 protects the senior and their heirs from ever owing more than the property is worth. There are situations in which the equity is depleted out of the property. And we talk about that from day one. So, it's not going to be a surprise.
Mhm.
So we talk about, what's important and how this loan works. But if by chance, let's say your property that's worth 500,000, the balance becomes a million, but the house never appreciates over 600,000. There's a $400,000 deficit. Who's responsible for that?
Mm.
Not the senior, not their heirs. They're not going to get a bill in the mail, nothing, because you paid that protection up front, that insurance of $10,000. So $10,000 covered $400,000 of deficit. So definitely want to weigh your options.
Mhm. I appreciate you explaining that because I have heard that said many
Yeah.
times. Oh, it's so expensive. But so I appreciate you explaining.
Yeah, a lot of people just, "Oh, it's too expensive. I don't want it." Well,
Mhm.
let's talk about why it's so expensive. Let's
Mhm.
let's talk about expensive and value versus cost.
Right.
So, most reverse mortgages, the appreciation of the property outweighs the balance growth. So, here's an example of a rate of 699 and the interest that's collected. And this is an amortization table that I show my clients from day one. So, we talk about how you want to structure this, and then we structure it, and then you see how this loan looks through age 100. They actually do stop at age 100 on the form. However, as I mentioned, the reverse mortgage itself goes through age 150. So the oldest living person is 118. I think she's in Italy. And if anyone wants to break any records, I will root you on. So as you can see in year one, the interest collected is 28,801. And again, I mentioned that you can divide this into 12 payments and, make interest only payments if you'd like so that the balance does not grow as rapidly. So the
Mhm.
loan balance in this case is 427,801, and that in this example is the mortgage payoff, the cash at close, and the financed closing costs. Okay? So the property value is expected to appreciate, or this in this example, sorry, it wasn't 800,000, it was 780. So 780 the first year, then it's anticipated to grow to 811, 200, and then so on and so forth. In this particular case, you can see that the loan balance will not exceed the anticipated appreciation. But let's say the market doesn't move that way and maybe it caps out at 877 and they owe 1.3. These are non-recourse loans. Nobody's going to get a bill for that deficit. So very, very important. And again, these are things that I go over from day one so that you know exactly what to expect.
Mm-hmm.
Okay, so Betty is 96. Her home is worth 500,000. She owes 70,000 on a current HELOC. She and her family need help paying for care in the home where she wants to stay.
Mm-hmm.
So, the age of the youngest borrower, she's 96, and the older you are, the more access to your equity that you get. So, the property value is 500,000. Her initial principal limit, the amount that the lender is willing to give against the property, is 361. The initial advance, $30,000, liens and payoffs, $70,000, finance closing costs, 18,000. This is where that $10,000 comes in for that mortgage insurance premium.
Mm-hmm.
So there's also a 0.5% that's collected each month uh, for the mortgage insurance, and that protects that if you have a line of credit and the market tanks like it did in 2007-8,
Mm-hmm.
they can't turn this off.
They
It's
have to keep paying.
protected.
Okay.
It's protected. And if they guaranteed you those payments, like for instance, my one couple that got the $1,500 a month, they
Mm-hmm.
guarantee you those for, perpetuity. If
Mm.
the market crashes, the value of the property isn't anywhere close, they still have to pay that.
Okay.
So it is, again, a non-recourse loan, and these fees, these expenses are protections in place for the senior and their heirs, because the heirs are never going to owe more than the home is worth. And if it's a wash, send the lender the keys, let them deal with it. Don't waste your time, energy, effort, anything. Okay. Oh, and one thing I wanted to point out here. So the line of credit starts at 257, but the longer it stays in there, the more it grows. And the growth rate is based off the interest rate plus the 0.5% of the
Mhm.
mortgage insurance premium. So no bank out there is going to give you 5.77% interest on your money.
Okay.
And then, of course, whatever you do use goes towards the loan balance. And then, of course, that impacts the equity. So we talk about all of that when I go over my presentations. So 10 ways, and there's more, but 10 ways you can use your reverse mortgage. Home repair, ADA upgrades, or purchase a better suited property. You can pay off your forward mortgage or additional debt. You can pay off everything that you ever owed ever. There are no limitations. Nobody can tell you you can't use your money for anything.
Mhm.
Access the growing line of credit, like we illustrated before. Pay for in home care. I've had so many in home care health agents tell me people cut back on hours, they don't keep up on their medications because of the costs.
Mhm.
Use this loan for that.
Mhm.
Financial arrangements, a legacy strategy. Let's talk about how you anticipate. I mean, death and taxes, those are the only two constants, right?
Yep.
So replenish savings or rebuild a rainy day fund, travel or visit distant family, supplement an income gap.
Mhm.
Long-term care policy premiums, they can be pricey, especially when you get older. And
Mhm.
then, of course, medical costs and prescriptions. So that's just 10 ways that you can use a reverse mortgage. But of course, the possibilities are endless.
Mhm.
Okay, so what are my obligations if I decide to take a reverse mortgage? The first rule is there has to be at least one borrower living in the property as a primary residence. So let's say, for instance, somebody breaks a hip and they need to go to a temporary care facility. That's
Mhm.
okay. You just have to let the mortgage company know that that's what's going on, because if they send the annual occupancy certificate and nobody returns it, that could trigger an event, and we don't want to do that. So we want to keep the lender informed of, who's living in the property.
Okay.
Keep the home in good repair. Are you able to maintain the home? Do you need money to, make repairs to the home? Are there health and safety issues that should be addressed? So, make sure you keep it in good repair or use the reverse mortgage to repair it. And then, of
Mhm.
course, paying your property charges like real estate taxes, homeowners insurance, flood, HOA, etc. Anything that triggers a lien on the property, we want to make sure that that is taken care of, because we don't want to trigger an event where the mortgage becomes paid or becomes due.
Okay.
Okay. And then this is no longer a loan of last resort. Most of my clients don't need one, they want one.
Mm-hmm.
Savvy homeowners are using a reverse mortgage in coordination with their investment portfolio. So, like I mentioned, taking from the reverse in down markets can help your portfolio last that much longer.
Mm-hmm.
Or buy a home that's better suited for them without depleting cash reserves. Put your mortgage on pause and enjoy the life you've worked so hard for. You can protect a surviving spouse from a severe decline in income. As I mentioned, my guy who's lost his wife to cancer went from, double the income to one that was the amount of his mortgage.
Mm-hmm.
And then maybe someone's received a disturbing diagnosis and they were turned down for long-term care or life insurance. You know what? Let's get that reverse mortgage in place so that we can solve those problems for you.
Mm-hmm.
So, know your options. You can visit us at reverseloansolutions.com. If you'd like to know more, you can sign up for a free consultation. You can always reach me at 805-301-1933. That number you can text as well. Or you can shoot me an email with any questions, Angela at reverseloansolutions.com. We are licensed to serve you in 23 states with a couple more pending. And the states I can serve are right here. So, if you have loved ones that are not close, let's talk about their situation. We can definitely have a conversation. And as I mentioned with my financial planners, we actually work on that together before we even invite the borrower into the conversation. So
Mm-hmm.
I talk to my financial planner, I let them know how this can be structured, and they have the final say on whether they think that this is a good idea for their client.
That was excellent information. And I'm really liking the advisory level approach that you bring to this. So let's discuss, why is there still so much negative stigma about reverse mortgages?
So, a lot of people still feel like the bank owns their home. They don't have any control over the property. And again, as I mentioned, they call, an 800 number because of a familiar face. And that person that answers the phone is not licensed. They've
Mhm.
been trained only to provide the maximum principal limit, that number that I mentioned to you
Mhm.
before, the maximum amount that the lender is willing to put against the property. That is what they're trained to do. They are not out for your best interest. They are not saying, "Oh, okay. Oh, do you have a deficit of like $500 a month? Let's see how we can convert your equity into payments that you can receive to negate that." So,
Mhm.
um that's why they continue to get a bad rap, because people have lost their homes. Originally, when the reverse mortgage was set up, they would keep off a younger spouse because they'd have access to more money.
Okay.
They would not make sure that the borrower met an income test, which that income test makes sure they can pay the property taxes, the insurance, etc., once the reverse mortgage is in place. And
Mhm.
then, we just want to make sure that everybody is protected. So, we just ask all the hard questions.
Right, you're taking a planning approach to an educational planning approach to it. So let's talk about. Well, tell me, is this true or false that a reverse mortgage depletes the equity and leaves the heirs with nothing?
False. Now, it could be true in some cases. And like I said, we talk about it from day one. We talk about how much equity is expected to be remaining in the property.
Mhm.
So, but I've had some people who've turned money into $1 million. So, I had one client who took $300,000 out of their property, and within 3 years, they turned it into $1 million. And, just,
They used
I
it
wish
as
I
a
was that
tool.
savvy. so it does not always deplete the equity. There could be more left for your heirs. We just got to take a look at it.
Right, and I think you said it during the presentation. It's a matter of, what do you plan to do with the money? How do you want to make it work for you?
Correct. It's all about, making intentional, purposeful decisions. And then,
Mhm.
like I said, it is the most customizable, tailored loan ever. So if you say, you know what, I need payments for life, but I really need some cash now, or I want to clear some bills. We just talk about that. And I say, okay, this is what it looks like if we do it this way. And this is what it looks like if you go this way. So I really feel it's so important that people can see into the future and know what to expect.
So we're talking about how people are living longer, and things are getting more expensive. So how much should people expect to retire on?
So if you have a portfolio of less than 500,000, we need to talk. I mean, with people living longer, most experts say that you need 80% of the income that you were earning when you were working. So if you were making $100,000, you need $80,000 a year to live on. And Social Security is not going to do that. Pensions are pretty much a thing of the past, if they exist. I mean, I have rare occasions where somebody gets a pension, or, because they were a teacher or or military or what have you. But it's not common.
It's
And
not
so,
anymore.
if you're not, you're going to either have to severely downgrade your living, as far as like you can't go out to eat all the time, or
Right.
go play golf as much, or what have you. You're going to have to really, really pare down, or see what you can do about maintaining your lifestyle by getting this type of loan.
Right. And that's not even taking into consideration care needs in the future either,
Correct.
and the cost of that. So
Correct.
about
Absolutely.
maintaining a lifestyle and retirement. Well, Angela, that was an incredible presentation. Probably the best that I've seen on reverse mortgage as far as the case studies and the data. So I really appreciate that for the audience. Would you please share with the audience again how they can contact you if they would like to schedule a consultation and get more information from you?
Absolutely. You can reach me at 805-301-1933. You can send me an email, angela@reverseloansolutions.com. You can go to the website. You can set up an appointment with me. Again, reverseloansolutions.com/contact-Angela. And, we'll set up a time that works best for you. We'll talk about, I really go through a 3-page questionnaire, and I say, okay, is your home suited for you now? Tell me about your home. And, oh, you mentioned there's a loft. What do you go up there? Is there a downstairs bedroom and bathroom? So I really do drill down to the heart of the needs.
I would also encourage any financial planners or other professionals, maybe legal financial professionals or senior care professionals, to reach out to you as well if they want to learn more and have you as a resource for their clients.
Absolutely. I love, love, love providing education and information. And if it doesn't fit, I'll tell you that too. You know what? You don't have enough equity in your property, or, your plan was to do this, but if you use the reverse mortgage, this is how it's really going to look. So just know that I'm not a high pressure salesperson. I am an educator. I love to make sure that people are taken care of. It's really on my heart. I mean, I've got 3 kids in private school, and when I was told by that guy, he's all like, "Yeah, they gave me 200,000." I'm all like, "I could give you that too. I'd make more money, but that's not the right thing to do."
Right, because you're doing things with integrity, as you said in the beginning, crafting it with integrity, which I love. Well, I really appreciate you being my guest today, and the fact that you are an educator, because the Connect Our Elders Empowering Aging podcast is all about providing education around senior care resources and how to pay for those resources. So thank you so much for being my guest.
Absolutely my pleasure. Thank you so much. And please don't hesitate to ever reach out if you need another speaker.
Absolutely. Well, enjoy the rest of your day, Angela, and to everybody in the audience, thank you for tuning in. If you would like more information, Angela has provided her contact information, and I'll share that in the YouTube video. If you would like more information on Connect Our Elders, you can find more information at www.connectourElders.com. Take care, everyone.